Welcome to part 5 on the MACD. This is part of a 7-part series presented by Strategic Trading, and if you would like to complete the entire series or get a copy of it all, simply send us an email to support@strategictrading.net or visit the website at www.strategictrading.net. Each part in the series addresses a specific aspect or an element of the MACD. Please pause the tape and take a look at the disclaimer and read it. In this part of the series, we are going to focus on the MACD histogram. The histogram basically represents the difference between the MACD and its 9-day exponential moving average, also known as the signal line. So basically, the histogram will show us the gap or the difference between the two exponential moving averages. Let's take a look together here at an Apple chart with 15-minute candles, and below the chart we see that we have a MACD, and on the MACD we have the MACD line, the signal line, and of course we also have the bars representing the histogram. As we discussed in the definition, the histogram basically shows us the level of the gap, or the extent or the distance of the gap between the two exponential moving averages that make up the MACD indicator. And as this gap increases in size, so do the bars. As the gap decreases in size, the bars also decrease in size. The biggest benefit of the histogram is really to give us a view of momentum in the market. Is momentum in fact increasing, or is it decreasing? The histogram is not often used as a signal generator or a system for taking signals, but there is a way that we will discuss that some people do in fact use the histogram to give them some signals. And as you will see here, as the market tends to move, the gap changes in size and the bars do the same. Basically, it is telling us whether momentum is increasing in the market or if in fact momentum is decreasing. As momentum increases, we see the size of the bars go up, and as momentum decreases, we see the size of the bars to drop. You need to keep in mind that just simply because you see the bars dropping doesn't necessarily mean that prices will follow. Take a look here. The bars were dropping, but prices were going up. So basically, the histogram is showing you information about momentum, not necessarily the direction of price. Now, one signal that some traders like to take from the histogram is they will often draw a line at the top of the histogram, as you see here, and they will look at the crossing of when this line is crossed by the signal line as a signal for entry, depending of course on the direction. If in fact the signal line crosses above to the upside and continues moving up, it can in fact prove to be a notable signal, as it was in this case. Prices did in fact continue to move up. And if the opposite is occurring, it could in fact generate a reasonably good signal to the downside if the signal line crosses to the downside of the line above the histogram. I want to take just a few quick moments to caution you about whether to interpret the histogram above and below the zero line. There are times when some people will believe that simply because the histogram is below the zero line, it means that prices are dropping. But in this case, you will see that even though the bars were below the zero line, prices did not drop. Histogram bars above the zero line are basically simply indicative of the fact that momentum was on the upside, or momentum was increasing, and then at some point it's starting to decrease. As it decreases, or as the bars go below the zero line, it does not always mean that prices will follow. Sometimes they will, sometimes they will not. So you have to be careful about that. Similarly, if we look at the histogram bars below the zero line, we should not rush to judgment and think just because they are below that it will always mean prices will be heading lower. Take a look here. The bars are in fact decreasing, but nevertheless they're still below the zero line, and sure enough we have a movement to the upside. So keep that in mind. Learn to use different indicators together and rely on confluence rather than any one single signal from any one indicator. We invite you to visit us and learn more about the MACD at strategictrading.net.